Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday, the 21st of December, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So we've reached the end of the year almost, haven't we, Phil?
Yeah, and I tell you what, the headlines and movements in the industry haven't slowed down, have they, at all?
No, we've got enough headlines today to actually cover a couple of shows. So it's just showing the sector isn't going quiet over Christmas.
And I think, I think there's probably still going to be more things. I mean, the people are still talking about things happening before the year end, and I think there's still opportunities that things will be done before the year end. Whether they be picked up by the media or not will be dependent on what they publish. But I'm sure we'll walk into 2020 with plenty to talk about, I suspect.
Yeah, in fact, we've got an exclusive at the end of the show revealing an acquisition that will happen before the end of the year.
Yeah. So do you want to go through the headlines? Because we've kept it fairly short because we've got a bit of an exclusive, haven't we? But we've picked some of the meatier headlines this week.
We have, yeah. So headlines this week, there's an MBO at Vantage Motor Group. Buyers are spending over 5 weeks searching online for their next cars. Dealers are showing some concern about high levels of pre-registration activity. We've got two stories on EVs. EVs are the fastest-selling used cars, according to CAP, and there's a rise in EV searches in Greater London ahead of the ULEZ extension, which doesn't take place until October 2021. The PSA Fiat merger, which we've been talking about over recent months, that actually went ahead this week. So we've got an update on that. And we've got an exclusive interview with Daksh Gupta and Richard Blumberger from Marshall Motors, because this week they announced the acquisition of 8 sites from Jardine Motors. So that'll be later on in the show.
Yeah, so keep tuned for that one to the end there. So as you say there, we've got the first story, which is that Mark Robinson sells his stake in the group to the management team, and that's Mark Robinson, who's the MD of Vantage Motor Group. And is it 16 years, 15 years he's run that business now? So,
yeah, 16 years. So he founded the group in 2003, and I mean you'll be familiar with the group up your way because it operates across Lancashire, Staffordshire, West Midlands, and Yorkshire. Multi-franchise group, rated 57 in the latest Motor Trader Top 200 with an annual turnover of £280 million. So it's I guess it's kind of a bit of a surprise that Mark is stepping down. As you say, there's been an MBO which is led by the chairman Phil White, finance director Tim Swindon, and operations director Andrew Mallory. But the good news is, I mean, because Mark is a very good operator, he is staying in the industry. So he does talk in this piece in Motor Trader about doing something new at some stage in the car retailing sector.
Yeah, and I mean, we've talked about other, movements lately, haven't we, where people have left their positions as CEO and gone into sort of semi-retirement and probably appear again, possibly in the future. But he's come out right away, hasn't he, and said that, he is looking at alternative things within the industry. So it's quite an interesting one that he has sort of stepped away, sold his share at such a significant time. But again, he's obviously got his eye on something else within the sector. So it will be interesting because, like you say, I mean, fantastic operator, great group. They have expanded quite a bit recently, haven't they, with Toyota and other franchises. Yes. So it'll be interesting to see what the new management leadership do with the group as we head into the new year, and more importantly, where Mark appears and what he ends up doing in the sector.
Yes, and we'll certainly watch out for Mark next year, and hopefully have him on the podcast to talk about any future plans that he's got once he's ready to do so. Yeah,
it would be great. It'd be great because I'm sure he'll have some insight into what he set up and how he grew the business. Like as you say, annual turnover of 280 million with pre-tax profits of 1.46 million and 600 employees. So it's no small business, is it? Being 57th in the Motor Trader 200. So yeah, again. built up a fantastic business there. And then we've got a bit of an interesting one, this, and it's kind of connected with some of the other stories, and talking about the buyers take an average of 40.5 days to search for their next car purchase, with 33% of people taking at least 6 weeks, according to the eBay Motor Group, and that's a story that Dermot Kelleher's talking about in the Car Dealer magazine.
It is, yeah, and I worked with the guys at eBay Motors on this story. It's based on some new research, which is the eBay Motors Group Digital Touchpoint Study, which is some research of, it's just over 2,000 car buyers conducted by Insights Advantage, and it's really looking at what the trends are amongst car buyers as they search. What do they do? And it looks at the different demographics as well. So younger buyers, for instance, spend the least amount of time in the process, with 18 to 24-year-olds taking less than 2 weeks. So the 12 days, which is pretty quick. Yeah. And as you say, the average is over 5 weeks, 40 and a half days, with a third spending up to 6 weeks. So it is quite interesting the way it breaks down in terms of the age groups. So 25 to 34-year-olds, for instance, take 32 days, whilst 35 to 44-year-olds average 39 days.
And it'll be interesting to see, going forward, how these statistics change, because obviously from a retailer's perspective, and obviously from a classified and systems like this, it's all about that efficiency and simplicity of being able to access the information, purchase the car and things like this. So, it's kind of how much is it the age profile, and the desire, and sort of saying, what, I need a car, I know what I want, they're going straight into it, they search, and they make a decision. But unlike older people such as myself that might ponder a little bit longer, possibly, and research a little bit longer, possibly, because I do. But it'll be interesting to see how that evolves going forward, won't it?
Yeah, and the point that Dermot makes is that most buyers are spending longer searching for the right car, but he says it's essential that dealers build and maintain high online visibility through multiple digital touch points. So it's all about keeping that visibility, not necessarily on one site, but across multiple sites, because if buyers are spending longer searching, they're using more sites on which to search. So it's so important to keep that visibility spread across as many sites as possible, really. Exactly.
And then the next story is it's come from myself, some research we've done with the dealer network, and it's a story in motortrader.com. So the headline is that pre-reg activity is unsustainable, say 76% of dealers. And this is kind of, on the back of what's been happening in the new car market. I mean, we've talked about it numerous times on the show, haven't we, that the pressures in the new car market. We saw a decline in pre-reg activity last year and possibly the year before that, and started to slow down. The appetite for pre-reg and tactical registrations started to slow. The necessity to do them started to slow down a little bit. Manufacturers didn't really put as much pressure on, but this year, with everything that's been going on in the new car market, it seems to return. I mean, we mentioned it, didn't we, on the show recently, that the reports were that 94,000 cars were registered in the last 3 days of September, and yes, that seems to have slowed down.
Yeah, and I think it's something that Mark Lavery touched on when we interviewed him last week, the sort of high level of pre-regs that have been in the market this year. And it's something we talk about every year, but there has been a lot of activity this year, as this research indicates.
Yeah, I mean, I think, without going over it again, I mean, we've got the cafe standards that are arriving next year, well, in a few weeks' time, actually, and potentially we are going to start to see some activity sort of probably happening now
I was going to say because there will be pressure on manufacturers to get some of those cars registered ahead of January the 1st, won't there?
Yeah, and I've had some interesting conversations this week because those listening to the show, and we might have mentioned it previously, I'd like get your view on this, Curtis. To be honest, but we've had the demonisation of diesel for some time now. We've seen the continual decline in that new car market for diesel, but and this is like I say, it's come up numerous times this week that we're possibly going to see that it's actually petrol next year that will be the bad boy, and diesel will need to be the alternative now, because there won't necessarily be enough EV product and hybrid products to serve demand, and therefore the manufacturers will need to get the diesel going to reduce that CO2 down and reduce the exposure in the higher CO2 petrols. And it's kind of, from a consumer's perspective, you think, hey?
Yeah, if they weren't confused already, they're certainly going to be by this. And it's confusing for dealers as well. It's really these mixed messages, because they've been, we've seen how the new diesel market has really fallen heavily this year. It's down 30%. So they are selling more petrols and more EVs as a result of that. But as you say, that could change next year. So there may be more of a focus on diesel, but how a salesperson actually gets that message across to a prospective customer, that's a tough old sell.
It's going to be very interesting again, and you do feel for the retailers, with this, because it's the ones, maybe it's just some people say, what, I'll sell whatever I can get. And that's it, kind of thing. But from a consumer perspective, it must be challenging. I mean, some consumers are just they'll stick to the diesel no matter what, and they have done. But there has obviously definitely by the decline over recent years of the diesel market share, the demonisation of diesel has definitely affected the market, hasn't it? So will be.
Yeah, which brings us on to EVs.
Yeah, so again, some analysis from CAP HPI, and they're talking about electric vehicles are UK's fastest selling used cars, and that's the story in AM Online this week.
It is, yes. So the research from CAP HPI shows that EVs are taking an average of just 39 days to sell, which is, I mean, that's pretty impressive. We've covered EVs in the used market before, because there is such a shortage of these vehicles. So when they do become available, they don't hang around on forecourts very long. So again, it's a tough one for dealers, because they'd like to be selling more, but it's just getting hold of them.
Yeah, and Chris Plum in the report there, they talk about obviously that some of the data that models, including the Citroen C0 and the Peugeot Ion, have seen their residual values improve over the last 2 years. They talk about that in November of 2017 that a 1-year-old 10,000 mile C0 was worth around £6,000, and today the similar example is valued at over £11,000. So we know the early days of the EV, they were just not in demand, were they, at all? And every month CAP HPI were reducing that RV value and the used car value on it, and now it started to recover as it started to increase. But again, they do talk about that the premium EVs still remained a challenge because of the high cost new. But again, I think at the minute that EV sector, until you start getting that volume in the new car market, the spread of models, it's very, very reactive. And you do get, we're starting to see through the wholesale some of those early EVs that have got the lower range capabilities. There's just no demand for them because they've been replaced by better vehicles.
Yes, this is you're absolutely right here, because I think the default setting is, let's buy a Nissan Leaf. I've heard about these newfangled EVs. Let's get a Nissan Leaf. But those first generation ones, as good as they were, the range was limited. So anyone in the market for a used car will probably be a bit disappointed. But interesting stats here, because it's showing that EVs are selling 9 days faster than petrol cars and 6 days faster than diesel cars.
So it is a case that there is demand and the supply is potentially limited, but when they do get them, there is demand for those vehicles, and they don't sit around for long. So, it's great news for the EVs and what we'll see in the future as those models start to arrive. And then we've got the next story, which is remaining with AM Online, and dealers must highlight ULEV exemption when selling compliant cars in the capital. And this is some research from Honcho, and they're looking at obviously around the Greater London area, particularly around the searches on Google for those vehicles.
Yeah, you're absolutely right, and I actually worked with Honcho on this particular story, and what they did, you're absolutely right. They analysed Google search activity in the Greater London area and found a significant rise in search terms like ULEZ checker, ULEZ car checker, ULEZ exempt cars. And to give this a bit of context, the ULEZ at the moment is really based in central London. It's the congestion charge zone, but in October 2021, it's going to be extended north and south to the north and south circulars. So it will become a significantly enlarged area. So the message here for dealers is that, if you're operating inside or outside of Greater London, you can expect customers turning up at your dealerships wanting to know more about EVs, because they've looked at how much it's going to cost them to drive petrols and diesels, and EV is the main alternative. So the level of search activity has really risen quite significantly year on year.
No, exactly, and just on touching on that and remaining on that bit there, that in the Guardian there's a story that we were talking about just before the show that's worth having a look at, and this is that London. You need to see the picture, and some of those listening to the show that know the area will appreciate what we're saying. But London to get UK's first zero emission street petrol and diesel cars will be banned from Barbican Estates Beach Street for 18 months and air quality monitored. And looking at the picture, you can kind of see why, can't you?
You can, yeah, because it's a street, but it's a tunnel, isn't it? It's totally enclosed, and you can see pedestrians walking up it, and I wouldn't fancy walking along that at all.
I don't think I'd walk around at any time of the day.
No.
To be fair, it looks a bit grim in a way, but it's not the nicest of streets, that one, is it?
No, not at all. So you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector.
And then moving on to the final story before we go to the exclusive interview, and this is on This Is Money, and it's nice to pick up these stories every now and again from these guys, but they've really jumped on and I mean this has been covered quite heavily this week, hasn't it, across the trade and consumer media, but the Peugeot Fiat tie-up has gone through. So it's a 50-50 deal between them, and that they've pulled up on the fact that the UK fears 5,600 jobs on the back of it as this new merger takes place.
Yeah, you're right. The merger has gone through, so it's creating this £38 billion mega company, which places it fourth behind Volkswagen, Toyota, and the Renault-Nissan alliance. And the story, it does raise concerns of the Unite union in the UK, because, of course, we've got the Ellesmere Port plant, which produces the Vauxhall Astra, and the Vivaro plant in Luton. Now, the bosses of this merged company have said that they've given assurances that on the future of the staff in the UK, but of course it's early days, and you've got these two massive companies coming together, and they will be looking after their domestic industries, in Italy and France. So the UK workers are concerned, and you can understand their concern. Ellesmere Port, it won't necessarily get the next Astra, but that's been historic. For as long as I've been in the sector, Ellesmere Port has always had to pitch in for the next generation Astra, and has always won it on the strength of the production there. But there's no guarantees now, so it is looking a bit precarious.
Yeah, I mean, Ellesmere Port has been under threat a couple of times, hasn't it, through recent years. I mean, there's been, particularly when Brexit all started off and things like that. The Ellesmere Port was always are they going to take the production elsewhere, and what's it going to do? So, but it's when you start talking 5,600 jobs, it's a significant impact, isn't it? That's the thing. So I don't know. There's hope that we'll see minimal change possibly, and it'll be a change of direction rather than a closure. That's what you would hope. But there's probably a lot to pan out with this partnership. I mean, obviously we talked about it at the time when it was announced that it's about that sort of PSA's appetite to enter the US sector more, and obviously then there's the other side, which is combining that sort of knowledge and expertise across the platforms from EV and connected vehicles, etc. So it will be interesting. But I mean, they do talk about the new group will be led by PSA's cost-cutting chief executive. They've worded that one well, haven't they?
Yes, yeah,
Carlos.
Exactly.
And the Fiat Chrysler will be John Elkann, I think he's pronounced, and he's going to be the chairman. So again, I think there's probably a lot to pan out on this one, isn't there, still? I mean, it's still fairly early days, but I mean, a significant change to the sector.
Yes, absolutely right. So next up, we've got an exclusive interview with Daksh Gupta and Richard Blumberger from Marshall Motor Groups. Now, as we said at the beginning of the show, it's been a big week for Marshalls because they've acquired 8 Volkswagen Group sites from Jardine Motors. So let's go over to the interview we did a couple of days ago and see what actually drove that acquisition and what it means for the group.
We're delighted to welcome back to the show Daksh Gupta, Chief Executive of Marshall's Motor Holdings, and joined by Richard Blumberger, who is the CFO for the group. And we're here to talk about the group's acquisition of this week of 8 group VW sites from Jardine Motor Group, and give us an update on Q4 trading and his views on 2020. So good morning, Daksh and Richard. Welcome back to the show, and hope you guys are looking for a bit of a rest over Christmas and New Year, I suspect.
Hi, Curtis. Hi, Phil. How you doing? Hi, both. Yeah, well, we're looking. We've had a busy year. We've added 20 business through 8 separate deals. So I think that's been the busiest year, certainly for me, since in the last 12 years. So yeah, we might be entitled to one glass of sherry and a mince pie. You never know.
well played.
We might allow Christmas Day and Boxing Day off, I guess, over the next few weeks.
A little saucer there with a mince pie and a glass of sherry ready and waiting for you.
Absolutely.
Now, Daksh and Richard, this latest acquisition, which is worth VW car sites, 1 VW commercial site, and a Skoda dealership, in that from Loughton, just inside the M25, up to Milton Keynes. Take us through the geographic thinking behind the acquisition and what it will mean to the group.
Yeah, I mean, so Curtis, it's a very strategic acquisition for us. I mean, it added 8 Volkswagen Group franchises. So, as you said, 6 Volkswagen passenger cars, 1 Volkswagen commercial, 1 Skoda franchise. And that's the one thing that gets lost in here. It's got a fantastic body shop in Loughton as well, which has got huge potential. So, from our perspective, as you said, we've the business from Jardine. 3 million. Rich will take you through the deal details, I'm sure, shortly. That did include 30 million of inventory, which obviously we would stop from in the ordinary basis. It's an underlying transaction of about 9.3 million. From our perspective, very strategic. I think one of our and you guys have probably heard me say this multiple times, our strategy is to grow scale with our existing brand partners who we believe are the right footprint wherever possible. And I think if you look at part of that strategy, first of all, you look at Volkswagen Group. I mean, they are the largest car maker in Europe, and I think when you look at the strength of them as a group, it's easy. Their core brands are Volkswagen passenger cars, Audi, Fiat, Skoda, Volkswagen commercials. The core car brands accounted for 20.6% of all new vehicles sold in this country, 11.5% on commercial vehicles. And when you look at the sheer scale of investment they're making in their future e-mobility, hybridization and digitalization strategy, from 2020 to 2024, it's 60 billion. As an industry, we're going through profound change as a result of climate change. That's resulting in investment from the OEMs to hit the is going to and that's going to require manufacturers to be fit. And when you look at the sheer scale of them as a group, it's phenomenal. So from our perspective, it's absolutely the right brand. The first VW franchise on Curtis, I'm sure you remember it when we announced it back in 2012, was the F-Cross acquisition, and it got us into Volkswagen. We've grown and grown and grown and grown, and roll forward 7 years later, we now have 53 franchises with Volkswagen Group, so we're very proud to represent them. And we are now, in fact, their number one partner in terms of outlets. So. And I'm sure you probably saw the RNS, the note from Alex Smith, who's the managing director of Volkswagen Group, was very, very kind. We didn't have a gun to his head when he wrote it. Alex, if you're listening, you can confirm that. If you know Alex, no one probably will be able to do that anyway. He's about twice the size of me in terms of height, so I certainly couldn't reach. But I think his words were very kind. He sort of commented about the fact that we were a trusted partner and that we had demonstrated our capabilities in terms of customers, etc., over the long term. So we're very proud of that. And I think when you look at what it does in terms of geographical footprint, I mean, locations are great. Milton Keynes, clearly the home of the group, Volkswagen Group. Aylesbury, St Albans, Letchworth, Harlow, Loughton. So really good geographic territories, great demographics, that really suit the characteristics of Volkswagen customers, I would suggest. It's a scalable business. They're 200 million in turnover. Whilst they've been loss-making, we feel confident we can turn them around. So in 2017, these businesses lost 3.3 million. They lost 2.8 million in 2018. But we certainly believe and feel very confident we can turn them around. And I think what it does for us also strategically, it takes our Volkswagen passenger car representation to 15 locations, which we think is around about sort of 6 to 7% of their national sales volumes. For Volkswagen CV, it takes us to 7 locations, which makes us their number one partner by number of outlets. And then Skoda, obviously we followed that up earlier with, it follows up the acquisitions we did earlier in the year of Sandy Cliff, which brought Leicester and Nottingham to the group, and the Progress acquisitions, which obviously added Bedford, Harlow, Letchworth and Northampton. So, combined that we sort of cement that number one position. And we think we'll do sort of 10% of the national sales volume for the brand. Very, very much strategic, right brands, right markets, bang in line with strategy. And I think whilst they need the turnaround over the long term, they will create great long-term value for our shareholders. Certainly, I've been to the businesses. I've been to a number of the businesses. I've been to the Loughton passenger car, CV, their body shop, and I've been to Milton Keynes Skoda and to Milton Keynes Volkswagen passenger cars. And I've got to say, I'm really impressed with the people that I've seen. Really good attitude, and I'm very confident we'll be able to move these businesses forward.
So in terms of, in terms of VW themselves, just to get your view on this, that obviously we've seen it, that obviously a lot of the groups now, which has given you the opportunities to grow with the brand, but a lot of the groups are moving away from VW as a brand at a time of where they've been reported of changing their business model, their strategy in terms of the reduction of partners and outlets to give a better, obviously, volume per site. What's I mean, what's your view on that? How does this fit with what you're thinking? I mean, obviously you're building that relationship with the VAG group, with VW and Skoda, etc. But where does this work with you in terms of against what some of the other groups are seeing at the minute with VW?
Well, I think we are seeing some movement in the network. That's part of the consolidation that's been going on for many years now, and I think it's going to be expected. I mean, I think depending on whose analysis you want to believe, I mean, I think most people, expect that somewhere between 20 and 25% of retailers will not be here, in 5 to 10 years' time, and I probably subscribe to that view for what it's worth. I think what you have to look at is which brands will survive and which locations will survive, and you need to have scale to make these businesses work. So I think from my perspective, we enjoy a great relationship with Volkswagen. Our sort of core Volkswagen passenger car and commercial vehicle operations perform very, very well. They make excellent returns for us as a business. So I think sometimes what happens is you've got to understand the brand, and our observations, well, you've got to have scale. So part of our sort of strategy is, we want to have between 5 and 10% of our key brand partners, and if because where we're really good is where we've got scale. Where we're not as good as we could be is where we've got small representation. So I think some people also don't necessarily get the franchise, and some others are better at it. So from our perspective, we're really excited about these brands and these businesses.
Now, Dash, as you say, you now have 12 Skoda sites, and they stretch from Barnstaple up to Nottingham. And as you mentioned, they account for 10% of the brand's volumes. And you're also VW Group's biggest partner in the UK. But what plans do you have for growing your Skoda, Audi, and Seat business, especially following on from your comments about you aim to have 5 to 10% of representation for the brands that you represent?
Yeah, I mean, I think one of the things that's interesting, we were literally less than an hour ago just chatting to the teams in Skoda. What's quite interesting there is, they were one Skoda site within the Jardines group, whereas being part of Marshall, they now are one Skoda site as part of 12. So, of course, I asked the question, how many used cars do you have in stock today? They said 65. I said, well, actually, that's the wrong answer. And I asked our franchise director, Paul Abraham, how many cars he got in stock, and he said 680 odd. So, it's not rocket science. If you've got 10 times the stock, you've got logic simply says you've just got 10 times the chance of selling a customer a used car. So I think that's how we'll grow these businesses. I think we'll grow these businesses through leveraging some of our scale and some of our practices. I mean, we've got some very clever technology in Phoenix. I think you've seen previously, Curtis, and that just enables us to run our businesses quite tightly. I think it's well known that the market is challenging, and I think lots of people are having a really tough time out there. But I think when you look at our results, we have continually and consistently been delivering a market outperformance. We demonstrated that our interims, we outperformed the new car market, outperformed the used, outperformed fleet. This morning's trading update, we said that we performed well despite the market being a bit more challenging as well in the second half of the year. And we've said we've reaffirmed that we'll hit our market expectations this year. So we believe we can grow using our operating model. We believe we can use our scale. We also believe having the stock pool makes a big difference as well.
And I think it's worth us also, we the market is consolidating. We're in a great position with the strength of our balance sheet and the revolving credit facilities that we've got. We've got a simple acquisition strategy. It's the right brands, right locations, and when the right opportunities come up, which in this case we're talking about with VW, it could be Audi, it could be Seat tomorrow. It's the right brands in the right locations, and we're in a place that we can capitalise on the opportunities as they come up.
I think two other things as well, just to add to that as well, is today we have 3 Seat businesses. We would like to grow bigger with Seat. I mean, Seat's performed incredibly well in the last couple of years. We very much like to grow with that brand. With that, Audi, we'd love to grow with. In fact, all of the Volkswagen Group, because of the level of investments and commitment that they've made to their future products, and it just gives us a lot of confidence. And I think it's an interesting one, this sort of 10% rule. I think, there's been this kind of notional 10% sort of ceiling that I think a lot of people have spoken about. But I think increasingly, it's interesting when you look at Alex's comments around trusted partner. It is going to get harder if you're a small, regional group or a one-man band. If you're a single or two-site Skoda operation, how do you compete with Marshall, who've got, some of the biggest cities in 10% of the UK? It's quite difficult, and all the systems and the developments and the training that we give our people, and Phoenix, it is a key differentiator that we have. And I think one of the things that the OEMs are seeing is there is a difference in performance with well-run, properly managed groups who have got that scale. And ultimately, OEMs want the same things that we do. They want us to sell loads of cars. They want us to sell loads of cars, parts and hours, and make a return on the way through. The interest of them and us are aligned. They want us to look after our customers as much as we do. There comes a little bit of tension occasionally around investment levels or targeting, but I think fundamentally, if they want us to be viable, then the way to do that is allow further synergies and allow a higher than 10% representation. So who knows? We may well see, maybe in 10, 15 years' time, maybe that 10% moves to 15%, and you could see a situation where in 15, 20 years' time, you see a situation where, there are sort of, 10 super groups controlling, 60, 70% of the UK. I don't know, but it's possible.
It is that scale, as you say. It's that scale. It's that reach. It's that profitable. You're no good to them, not profitable at the end of the day. So it is that working relationship between you as the retailer and that relationship with the consumers, and them as the OEM, the brand. And you can see that starting to appear more and more these days, can't you? And touching on that, in terms of Volvo, moving away from the VW, but obviously you've sort of intimated potential opportunities or growth intentions with Volvo. Is that something you can share with us?
Yeah, so we said in the RNS this morning that we're due to complete this week with Volvo in Derby. Or this year, sorry, Volvo in Derby, which we're hoping to complete soon. And we'll update our year-end results presentation in March next year on how it's progressing post-integration. I think it's also worth noting that in September, as the largest Volvo dealership group in the UK, we also commenced a new partnership with LEVC, which is the manufacturer of electric London taxis owned by Geely Automotive Holdings, which also owns Volvo. And the group represents the LEVC brand in Nottingham, and it's sharing our group Volvo franchise. So Volvo is a major brand for us, and with the Derby acquisition, it will further cement our position as the largest Volvo franchise group in the UK with 9 retail centres.
Now, one last question for both of you. You also issued a trading update this week. What can you share with us on the group's performance in Q4? And maybe if you can also shed some light on how you see Q1 panning out for the sector as a whole. But I guess the million-dollar question is, will the outcome of the general election, do you think, start to have a positive impact after all the political and economic uncertainty which has characterised much of 2019?
Yeah, Richard, why don't you do Q4 and I'll do Q1?
Okay. So I think it's been well documented and previously reported that the trading conditions have tightened in 2019, and Q4 was particularly tough, or is particularly tough, with continued weaker consumer confidence around the political uncertainty of Brexit. There's ongoing head cost wins and some vehicle supply constraints. But the SMMT forecast for this year has declined to 2.8%. But despite that, we performed well in this challenging market, and we continue to beat the market as we reported at the half year. So despite the trading conditions weakening in Q4 across the market, we expect to deliver our previous consensus. So our guidance remains unchanged for this year.
Yeah, and I think Richard, the key thing that maybe got lost there, we have outperformed the market, which is it's quite challenging out there. But I think the most important thing is when you can consistently outperform the market. I think that demonstrates the performance of the business. So we outperformed the new car market in H1. We outperformed the fleet market in H1. We outperformed the used car market, and that trend's continued in the second half. So we're really pleased with that. I think in terms of Q1, Richard's touched on the SMMT forecast there for 2019 at 2.8% down. I mean, you may have seen the forecast for 2020 that was put out on the 31st of October by the SMMT, and that indicated a forecast of minus 4.4%, which is quite interesting because I must admit I was a little bit surprised by that, to be honest with you, because first of all, it's the fourth year of decline, which is unprecedented. And if you look at the data going back to 1970, that's never happened before. And I think, you kind of look at that and you wonder, well, if you had an SMMT forecast today, what would that look like? Because, undoubtedly, and Curtis, you've touched on this, one of the things that's sort of caused a huge amount of degree of uncertainty has been the sort of political and economic environment that's been created by Brexit. And I think when you look at, the news that happened last week, I think if you were to do the same SMMT forecast, and remember that forecast is collated by the submission of all of the various OEMs into the SMMT. So when you think about that, what's happened, what's different today versus the 31st of October, what's different is we have clarity on the trajectory of Brexit. We are leaving the EU. You've seen Boris is enshrining in law that there'll be no extension. So we will be leaving the EU in 12 months' time. Now, whether you're a Brexiteer or a Remainer, if you're a Brexiteer, you're happy. If you're a Remainer, I guess you probably sit there and say, well, okay, democracy has prevailed, and actually you may not agree with this, but we now have clarity. Don't want to get into a political debate, but that's probably how most people are looking at that. And I think the other thing is when you look at what's happened in the last 6 weeks in terms of currency, in October, pound to euro was 106. It's now 121. So that sort of 15% movement is great news for our OEM partners because, of course, that's going to make them even more competitive. And, of course, that will fuel some stronger consumer offers, which I think will be good news. So I'm not as negative around 2020. I think we've got to wait and see what happens. Yes, there's a little bit of uncertainty around what an actual exit might look like from the EU, but we'll wait and see what happens in the first quarter, I guess, and see what happens. But I think the SMMT will put another forecast out on the 1st of February, and we'll be interested to see what that looks like now that we've got all of that clarity around some of those issues.
Yeah, I think you're right. I think we forecast, I think for Q1 a sort of a medium about down 1.3%, which feels a bit more closer to the mark on the clarity, as you say. I mean, we've spoken, Dash, that strength of the sterling, if that continues, we had obviously Mike Allen on last week from Zeus Capital, and if that does continue, then that gives negotiation, that gives revenue, that gives a stronger market for the OEMs in the UK, and that's only a good thing. And we know that there's all the things around CAFE arriving next year, but that we've had the certainty now around fleet registration, the fleet market. We went through a period of uncertainty in the fleet market through midpoint this year. So hopefully, if that remains in place around that fleet sector, we could see a reasonably good year. I mean, I can't see that it increasing, but I think, as you say, I think that 4.4% decline is possibly on the pre-election outcome negative view than obviously post-election. So I think you're right. Hopefully we'll start to see some strength as the sort of clarity and the certainty has now returned.
Yeah, agreed.
So again, great to have you guys on, Dash and Richard, and really appreciate you sparing the time because I know you are both very busy and the year hasn't finished yet either. I mean, it's you've still got a little bit of time to get a few more things done, as Richard's alluded to there. So I think fantastic. Thanks for sharing the insights and obviously on the latest acquisitions and touching on some of the future plans and obviously putting into context that relationship between retailer and the OEM. So an absolute pleasure, and I think you deserve a day off this year on Christmas Day Dash and Richard. I think you deserve it. So
yeah, but just the one, Dash.
a mince pie and a glass of sherry all around. I think there you go.
Yeah, I'll be looking at my BlackBerry and iPad and iPhone all day long.
Fantastic. Well, it's been an absolute pleasure as always. It always is.
And have a great Christmas to all the listeners.
That's great insight from those guys into it. I mean, as Dash and Richard were saying, it's been a busy week for them, hasn't it? I mean, what did you say, an hour and a half sleep or something that they've had?
Yes.
So they've had a busy
absolutely
time.
Right. And of course, it doesn't stop there because they're looking at Volvo in Derby. That's our little exclusive there.
I mean, we without repeating what we've just recorded there, but when we talked previously about consolidation within the sector, and we talk about scale and growth and things like that. I mean, Dash and Richard do make a valid point there when they're talking about the Skoda dealership that they've purchased. That all of a sudden that business goes from accessibility of circa 60 vehicles, used cars, to in excess of 600 overnight. As a result of the acquisition. So that's where you start to get a true insight into how this scale and resource does work from these large groups and these partnerships with the brands.
Yeah, it was a point well made, and the scale of the Skoda operation now. They are the largest partner by sites in the UK, and that's happened relatively quickly over recent years. They have targeted Skoda, wow. And from what Dash was saying, it's going to be interesting to see what happens next, certainly with VW, but of course Audi and Seat as well. They will grow with their existing brands, so I suspect there's more to come next year there.
Yeah, and the news I think is breaking this weekend around the Volvo as well, so it will be interesting to see what comes out of these guys for 2020, because they've 20 acquisitions through 2019 when we've seen consolidation, so it'll be very interesting to watch that one as it grows. So that's kind of it now. So that's the last story and interview for 2019. So you've been listening to the Motor Trade Radio in association with eBay Motor Group, and it's the only weekly podcast serving the car retail industry. And I think all remains to say from me and you, Curtis, is really Merry Christmas to everybody and all the best for the new year, and thanks for tuning in on a regular basis and getting involved and supporting the podcast, I think.
Yeah, absolutely right, Phil. Happy Christmas, everyone. We're back in the new year. In fact, we're back in the first week of the new year, so not much of a holiday break for us, Phil, but there will be lots to cover, and we will be there talking about what's happening in the sector.
Wonderful. Look forward to it. And again, personal thanks to you, Curtis, for the support this year as well. And hopefully we'll have more people on next year for interviews and talk about the headlines throughout 2020. I'm sure it's going to be just as busy, if not busier, than we've seen this year, I suspect, at the minute. I think 2019 hasn't slowed down at all, and it seems to be accelerating as we move towards the end of the year. So 2020 is going to be a very, very busy year, I imagine. Wonderful. So thanks for listening, everybody, and we will speak to you in 2020. Thanks a lot.